Marc Cuniberti, financial columnist for half a dozen newspapers and host of MoneyManagementRadio.com on 66 stations nationwide. Your coronavirus update today, March 3rd, and market commentary. So we're over 1 million cases in the United States. Now, those are the ones that have been tested. I personally think that there's probably 5 million people or more that haven't been tested. If you take the number of people that have been tested and the number of deaths, which are around 59,000, it's got about a 5% mortality rate. However, if we look at maybe 5 million people have not been tested, then the mortality rate drops to what, 0.5% there. So not quite sure exactly what the actual mortality rate is. We are seeing most of those elderly people with pre-existing conditions, but we do have some that are younger people that we're seeing obviously on the news. Unfortunate statistics there. We have 204 nations that have contracted this virus. So it's basically everywhere. It's making the news. Being concerned with the economics of this, I'd like to kind of stick there. We're seeing so much economic damage from this. I personally think that we're going to see a worldwide depression, and those in underdeveloped countries, there's going to be a lot of people starving, a lot of people in trouble, getting sick, and not necessarily from the virus. Normally, when we have a recession or a downturn in the economy, we're seeing the emerging markets, people will starve to death. So I think the cure of a global shutdown could be worse than the actual virus. I know there are others that think otherwise, but we're going to see some severe economic damage. We're still early into this, and just listen to some of these figures that we're seeing today. As far as the Dow concerned, it sits at around 21,000. I could give you an exact number, but it changes by the second. Up 500, down 500. It's crazy. The yearly low was 18,213. That was off 39% from its high in February of this year, which was 29,568. Right now at around 21,000, it's down around 29%. So it's still way, way down. The hedge fund investor Bill Ackman, he basically started buying in around 2 weeks ago. We started buying in there around that time as well. And he's up 15% in 2 weeks. Now, that's not to say that this thing can't, fully implode the economy worldwide. We don't know where this is going. So I will stay with our recommendation. Be very careful putting new money into this market. This market is completely out of control. It's completely wild. It's going up, down, just all over the place. What stocks are moving? Well, at least not everything is falling. We're seeing the stay-home economy stocks. Some of those are doing rather well, or at least maintaining their pricing, some going up. We're talking about streaming, people that make, companies that make cleaners, disinfectants, pharmaceuticals, online shopping companies, just a host of stay-home economy companies that are benefiting from this or will possibly benefit from this. Energy has been crushed with oil. Oil and energy has been totally crushed. That started a couple of weeks ago when the Russians said they weren't going to cut back their production. Now Trump's gotten involved, and he's basically trying to get them to negotiate. When the Russians said they weren't going to cut down production, Saudi Arabia opened up the spigots to try to hit them hard. And so oil has been down. Gasoline, price of gasoline, as you know, has been coming down. So that's at least a little bit of good news. Retail, as well as airlines and cruise lines, theme parks, restaurants and hotels, entertainment, service industries completely devastated, and everybody's still in a lockdown. Gold, the flight to safety currency, did have a nice little run there, but it's kind of flat. Normally when the markets fall really hard, people need to raise cash and they'll sell everything, including gold. The Fed has relaxed, this didn't make the main news, but the Fed has relaxed leverage requirements for big banks. Now remember, those leverage requirements were upped after 2008 and 2009. Now the Fed has relaxed those again because they figure if they lower the leverage requirements that the big banks can lend a little bit more and they don't have to keep so much cash on hand. Cash is king, and cash is in real short supply. The COVID shutdown is estimated, latest estimates to affect the global economy's $2.3 trillion. I personally think it's going to be twice that. Obviously, the stimulus checks, $2.5 million in a stimulus relief package from the feds, has so many areas where they're just going to be spraying money. It's just goes beyond. I could take an hour and tell you where it's all going to go. Consumers will get some checks. There's going to be some loans that basically will try to help people, not fire people. And those are going to be administered through the local banks. The banks are balking on it. Rollout day was today. A lot of banks have not rolled that out because they haven't been given clear instructions from the Fed on how that's going to work. They don't want to be on the hook for it. The bill basically says that if you borrow money to not fire employees, you may not have to pay the loan back. So there you go there. March payrolls fell 701,000. That's crazy. Usually payrolls jump by around 200,000 a month. They're down 701,000. Probably next month it's going to be even worse. The Fed has allowed loans from your IRA with no penalties. Conditions apply. Even my IRA actuator, the person who handles my IRAs, doesn't know all the rules to it. So all these things are still up in the air. We're just going to have to be patient. I know a lot of you people are really hurting for cash. And, you know, this is a big government program. Pelosi's talking about rolling out another stimulus package. So the amount of money that the feds and indeed the global worldwide central banks are throwing at this is off the charts, completely off the charts. In my opinion, when this all settles down and all that money hits the market in 2 or 3 years, we're going to see massive inflation. Right now, we're seeing deflation. Everything is dropping in price because of lack of demand. California, my home state, I'm in Nevada County, says that it's okay to delay your sales tax payments. That's going to kind of help there. And the IRS has basically pushed back the deadline for tax filing. The latest figure I saw was that there's 53% chance of recession in a year. I personally think that it's going to be very hard to avoid, if not a depression, in a lot of parts of the world. I think a depression is definitely coming. With all the money coming out of the feds, it may not be as nasty as a standard depression that's not manipulated, but it's still going to be obviously not very nice. Airlines have been ordered to refund flight tickets caused by COVID, small things there. A lot of the cruise ship lines are not getting federal assistance because their ships are registered offshore to avoid U.S. taxes. So bingo, right back at you. No help for the cruise line as far as we know. And other than that, it's just craziness that we're all living in here. Just stay calm, be clean, stay inside. Social distancing is important. You know, there are a lot of people hurting out there. So we're just going to have to make do with what you can until we get some assistance for sure. You can watch the YouTube channel, Marc Cuniberti, for daily updates. You can also send me an email if you like. The email goes to news@moneymanagementradio.com. My website is moneymanagementradio.com as well. There's no charge for anything on that website. You can subscribe to the website for my updates and news articles there, and also past radio shows. No charge for any of that. My name is Marc Cuniberti. Stay safe, and I'll keep you abreast of what's going on. Thanks for listening.